Hello and welcome to another video. Today we'll be looking at a strategy you can use to trade volatility 75 index on the 5 minutes time frame. Okay, on my screen I have V75 5 minutes time frame, and I have three windows. I have the main window. This is my main window. I have indicator window 1. This is indicator window 1. Then I have indicator window 2. This is indicator window 2. Okay, as you can see, I'm in a trade and I'm in profit. Okay, but that is not what the video is all about. The video is all about how you can use this strategy to trade volatility 75 index and make profit. Now on the main window, this is my main window. Okay, I have some moving averages. All right, now the way the strategy works is when this blue moving average, this blue line, when it's above the black line, okay, when it's above this black line, all right, bullish trend is bullish. Okay, on any time frame, you can use this strategy on any time frame. It means the trend is bullish. Okay, and when it is below, okay, like the blue is below the black line around here. So this is where it started from. Okay, as it goes below, then the trend becomes bearish. Like you have it going below here, trend becomes bearish. Of course, there's another black line that is directly on price. Wherever price goes, it's directly on price. That's the smallest period moving average. But this particular one is 240 period simple moving average, this black line. So whenever the blue line, which is my 50 simple moving average, whenever it drops below the black line, I have my bearish trend. All right, so I can always scalp, okay, by selling. But whenever it goes above, like we have it going above the black line around here, so this is the development of bullish, okay, trend. So I always look for buy position. Okay, all right, and it's going up, as you can see, on the 5 minutes time frame. So you can use this strategy on any time frame. You can use it on 1 minute, you can use it on 15 minutes time frame, you can use it on 30 minutes time frame, you can use it on 1 hour time frame, 4 hour time frame. Whatever time frame you feel like using it, you can use this strategy on that time frame. So that the basic function of the blue and the black line is to determine trend. Okay, now this other black line is your trigger entry. This one is your entry trigger moving average, in the sense that if the blue line is like the blue line goes below the black line around here, so your trigger, okay, your trigger moving average, okay, will always, okay, will always stay on price as it is. So the moment you have this crossing around here, okay, you can look to sell the break of the low. Like you have the crossing around here, okay, let's assume you have the crossing around here. All right, so the low, okay, should be somewhere around here. So the break of the low is where you start to sell. Like let's just assume you start to sell somewhere around here. So at it being, you enter your trade around here, okay, and then you are in loss. Then as it comes down, because the trend is bearish, as it comes down, then you can see it's bearish. The blue line is below the black line around here. So as it comes down to break the low, let's assume this is the low, okay, you enter your trade and then you start to sell and you make some profit. Okay, so that's how to enter your sell trade. For your buy trade, it's just similar. There's a similar situation. You buy only when the blue line cross above like the blue line crossed above the black line around here. So we start to buy any movement from here. So if I want to place my buy trade, okay, I have my blue line crossing the black around here. So if I want to place my buy trade, I'll enter or place a buy stop somewhere around here at the break of the high. Okay, something like this. So I can, above this line, I can always buy. All right. So if you bought around there, of course, you have drawdown. Okay. So if you place your buy trade around here, okay. Now this is the low. This is the low. Your low is around somewhere around here. So your stop loss should be somewhere around there. You can't win all the time. So if your stop loss is around here, of course, if you don't scalp this as it draws down back to your, if you don't place stop loss in profit area to protect your trade, of course you have drawdown, okay, and it will trigger your stop loss. All right, so don't forget, if you place your buy entry here, your stop loss should be at the pullback, the low of the pullback. This is the pullback, the low. Place your stop loss there. Okay. All right. But if you place your buy trade here and there is no pullback like you have here, of course your stop loss should be here. All right, which is the low. Let's assume this pullback does not exist. This is the lowest point relating to your buy entry. So your stop loss should be somewhere around here. But now that you have a pullback, you can easily move your stop loss to somewhere around here below this pullback. Okay, then you ride along with the trend. Now, when you have a considerable or a sizable profit, you can always move stop loss in profit area. Okay, I did a video on how to trail your profit with stop loss. If you check the channel, you'll find the video. All right, so but let's assume you did not move stop loss to protect your trade and you have a pullback. Obviously, it will trigger or trip your stop loss around here. Okay, if it trips your stop loss around there, it's nothing to worry about. You can always enter your trade when this line, the price, crosses above the blue line. So when it crosses above the blue line, what you do is to look for the eye, like you have it crossing above the blue line around here. Don't forget you are in the bullish trend. Since the blue line is above this black line, you are in a bullish trend. But when the black line dips below and then crosses above, okay, you can always enter your trade at the break of the eye. This is the eye. All right. Now, if let's assume you enter your trade somewhere around here and you have a pullback, then price starts to go up. As you enter your trade around here, here may be your stop loss, okay, which is the nearest low. Now, as soon as you have a pullback, then price breaks and you enter back into profit, you can move your stop loss to the low of the pullback. Okay. Now, as you ride along with the trend and you make some profit, you are expected to move to trail your profit with your stop loss. Okay. Now, if you continue to trade your profit with your stop loss, you continue to ride along with the trend. So that's basically how to use the moving averages on the main chart. Okay. Now let's go to indicator window 1. For indicator window 1, you enter your sell trade, okay, or you have your sell signal when the blue line crosses above the 80 level, RSI level, and then dips, like you have a dip here. That's a sell signal. Okay, when it goes below the 20 level and then comes up, like you have around here, comes up above the 20 level, that's your buy signal. Okay, it gets to the 80 level. Okay, it goes above the 80 level, you wait for it to dip below that level, then you have your sell signal, like you have around here. Okay, it goes below the 20 level, just like what you have around here, goes below the 20 level, and it comes up above the 20 level. Let's say it gets to 22 or 25, then you start to buy. So that's basically how to use the indicator, the indicators on indicator window 1. Now let's look at indicator window 2. Okay, this is indicator window 2. So how to use this is when you have the black and the red line touching. Let's assume the black and the red line are under, let's assume they are under the Ichimoku, okay, and you have it touching the base of the Ichimoku like you have around there. This is your buy signal, okay. Now when you have it touching the base, that's your buy signal, okay. But for sell signal, just like you have it touching the base, when you have it from the top, when it's touching the top, okay, like you have around here, is your sell signal. Okay, when it drops from the top and touches the top of the Ichimoku, like you have around here, that's your sell signal. Okay, touching the top, that's your sell signal. When it drops to touch the top, when the two lines, the red and the black lines, drops to touch the top, that's your sell signal. Okay, from the base, okay, from the bottom, if it touches the base of the Ichimoku, the two, I'm talking about the red and the black lines, that's your buy signal. Okay, like you have around here, when the boat drops down on the Ichimoku, okay, and the boat touch the Ichimoku top, okay, the top of the Ichimoku cloud, that's your sell signal. Okay, like you have around there, this is a buy signal. When of course the two lines goes down, then they start to cross over and then touch the base of the Ichimoku cloud, that's your buy signal. Like this is your sell signal. When you have the two, just before the boat enter into the cloud, just before they enter into the cloud, that's a sell signal. Like you have at the base, just before they enter into the cloud at the base, okay, that's your buy signal. And this is your sell signal. Okay, all right, this is your buy signal. Okay, all right, so that's that for the strategy. Is a good strategy. Make sure you back test it by checking what has happened in history, okay, to be sure that you understand how it works, you have the grip of how it works. Okay, now let's look at the parameters. Let's not forget the parameters. Okay, I have moving averages. I have moving average. The first moving average is 50 period simple moving average applied to close. The shift is 0 and the color is blue. Then I have Bollinger Bands, 1 period, deviation is 2.0, shift is 0, then apply to close and the color is black. Then I have 240 period, moving average, shift is 0, method is simple, apply to close, color is black. Then for indicator window 1, I have relative strength index, the period is 1, apply to close. Now the color will match the background color, okay, and the levels, we have 20 for buy, 80 for sell, color is black. Then we have MACD, all right, the fast EMA is 12, the slow EMA is 26, MACD SMA is 5, apply to close. Now the color of the main style will match the background color of the chart, and then the color of the signal style is blue or purple. Okay, now for indicator window 2, we have MACD. The fast EMA is 12, the slow EMA is 26, and the MACD SMA is 9. Apply to close. The main and the signal style will, color of the main and the signal style will match the background color of the chart. Okay, then I have Bollinger Bands. Period is 50. The deviation is 2.0. Shift is 0. Apply to first indicator's data. And now the color will match, the color of the star will match the background color of the chart. That's for the Bollinger Bands. Then I have moving average. The period is 200. Shift is 0. Method is linear weight. Apply to previous indicators data, and the color is blue. Okay. Then I have another moving average. Period is 1. Shift is -3. Method is linear weight. Apply to first indicators data, and the color is red. Now I have envelopes. Period is 20. Shift is 0. Deviation is 0.100. Method is linear weight. Apply to previous indicators data. Now the color of the upper band and the lower band is black. Okay, then finally we have Ichimoku. Now the Tenkan Sen is 8. The Kijun Sen is 8. The Senkai span B is 52. Okay, and the up Kumo is green. The down Kumo is orange. So that's that for the parameters. That's that for the parameters. It's a very good strategy. You like it. You like it. It's something that will work for you if you get the grip of how it works. You can see price is still going up. So all I need to do is just to move this stop loss I have below here. Just use it to trail. I can place my stop loss here. Okay, just to trail the profit. Okay, as price goes up, I'll move my stop loss after price. Okay, so don't forget the blue moving average. Whenever it stays above the black, you are in a bullish trend. Look for buy opportunities. Okay, and when it stays below, you're in a bearish trend. Look for sell opportunities. Okay, and for your indicator window 1, of course, when you have the blue line like you have around here, when it dips below, wait patiently like a sniper and wait for it to come above the 20 level like around here, then start to buy. Okay, let it come above the 20 level like we have around here, then start to buy. And the reverse is the case for when you want to sell. Let it go above, but when it starts to dip below, then look for selling opportunities. Okay, and don't forget for indicator window 2, when the black and the red line, if they cross over, you still have to wait until they both touch the top of the Ichimoku cloud like you have around here. Then you can enter your sell trade. And for buy trade, wait patiently. If they cross, still wait, because there's a tendency for them to cross like this and not go up and still cross down like a fake out. Okay, so just wait for it to touch the clouds. As they enter into the clouds, it will definitely, price will definitely go up. Okay, and then you can ride, okay, and buy and enjoy your profit. Okay, so that's that for this strategy. Don't forget to click the subscribe button, subscribe to the channel, so that you get to see more of our videos. Okay, click the like button, like this video, click the like button, go ahead and click the like button, like the video. Okay, also click the bell button below the video for notifications, so that when we upload another video, you'll be the first to see that video. All right, don't forget to drop your comments below the video. Ask questions if you are not clear with any part of the video. Ask questions. We'll try as much as possible to explain or clarify whatever you do not understand about the video or any of our videos. All right. Then we have websites. We have a website where we publish articles on how to trade Forex and Volatility Index. The first website is www.binfxtrader.com, and the second one is fxfables.com. Please visit these two websites and get to learn more on how to trade Forex and Volatility Index. All right, till I come your way next time, it's